Welcome to Capstone Coffee Conversation. We started these conversations a little over a year ago, and the idea of we want to just get in front of clients and individuals, discuss our market views, provide some education and timely updates. And we thought, what a better way, what better conversation to kick off 2021 than a recap of 2020 for Capstone and the markets. And then also, what do we see for 2021 and the year coming forward? Right. So my name is Ryan Skogstad, and thanks for joining us today. And I'm going to have my partner, Rob Norton. He's going to recap 2020 for Capstone.
Thank you, Ryan. Kind of a quick overview of Capstone growth in 2020. We added 5 new advisors. Welcome Linda, I guess more. Sean Skogstad, Brett Skogstad, Linda Skogstad, ring a bell. Craig Hewish and Melinda Hewish and Brian Felshaw and Alicia all joined us in 2020. We added a new office in Silverdale, Washington, as well as a tax practice with that office. And here in Salem, we were able to add another operations staff, Adriana, to support both advisors and clients. We were able to grow assets under management to be greater than $550 million. And technology has continued to evolve, and we've continued to add tools to the platform for advisors and clients alike. So with that in mind of what happened at Capstone, Ryan, what happened in the markets?
So I know that 2020, the beginning of 2020 seems like a lifetime ago. We've been through a lot since then, but if we can kind of go back in our memory log, the beginning of 2020 in the markets started off in amazing fashion. We were coming off of 2019, which was a record-setting year for stocks. And the first month and a half of 2020 were regularly met with all-time highs in the stock market. So things started off really well. The economy was also clicking along with very low unemployment and again, setting records in many different ways. COVID arrived mid-February to the stock market, right? And so for the next 5 weeks, from mid-February to late March, we saw the largest decline in the quickest amount of time in the stock market in history. And that says a lot when you look at the history of the market and the things that we've been through, including Great Depression, oil embargo and what have you of 73, 74, the tech bubble, financial crisis. This was the quickest decline in history in that 5-week period. We saw days of negative 10%, multiple days like that in 1 week. And we also saw days of a positive 10% in that week also. So the market became extremely volatile for that 5-week period. As we left that 5-week period though, we saw certain companies do extremely well through 2020. And as I look at just the surface level of the stock market, you'd say 2020 was a good year for stocks, right? But that's just really scratching the surface. What really happened is we look at just a very small minority of companies in 2020 had record profits and record stock prices. Those companies were typically centered around the tech sector, where the stay-at-home orders that were directed really forced people to begin to use technology, stay at home with their working from online at home. Maybe their child has a new Chromebook to work for the school district. You began online ordering for retail or for groceries even, communicating via Zoom technology. So we saw certain areas of the stock market explode and do really well, but the majority of companies really languished through 2020, just survived, and some really even struggled. So at surface level, the stock market did really well, but the deeper dive, the average company did not fare that well in 2020. We also saw interest rates that started at 1.9% to start the year, still very low, went to 0.5% after COVID for a 10-year treasury bond. And so think about that. You invest for 10 years with the guaranteed rate of 0.5% per year for 10 years. So that's how the year, kind of in general went. But as we went to the end of the year, we saw the tide start to change. Rob, what happened towards the end of 2020?
So as Ryan said, very focused, maybe 5 stocks were responsible for close to 90% of the return in the S&P 500. And growth was the major driver. Since Halloween, since 10/31, growth has been positive about 14%. Tech has contributed about 17% return. But emerging market then has done 18%, value has done 19%, international at plus 23, so that's starting to come on. Financials, a value sector that has been beaten down for a while because of low interest rates. Financials have done plus 30, and then small caps that have been beaten up and unloved for 2 to 3 years, plus 37 in 60 days.
Yeah.
Pretty amazing. So what worked in the back half of the year, the last 2 months, was not the same as the first half of the year or the middle. But again, at Capstone, we consistently have a disciplined process. We build a plan, we give the plan time to grow, and we stay the course. That way, if growth is outperforming or international is not, or small caps are beaten down, we have a diversified portfolio managed on our disciplined process in an institutional manner. I'll talk a little more about that later.
In 2021 now, as we enter, there's a lot of things that we can look outside the window, just like any year, but it feels like there's more now. But there's a lot of things we can be scared about as we look out and we try to make investment decisions. A quote that I like to lean on and share with my clients when they call in a frantic mood is from Peter Lynch, who is an institutional money manager. And the quote goes, "More money has been lost in preparing for recessions than in the recessions themselves." And what that basically means is that more money has been lost in saying, hey, the downturn is coming, the market's too high, or I heard this, or I read that, or this person predicted that. And so when people make changes to their portfolio on a consistent basis, preparing for the next downturn, that sometimes comes, but a lot of times it doesn't come. Or if it does come, it comes much later than people anticipated. And so we try and make sure that we stay the course, as Rob was mentioning. What we do know about 2021, we think we know, is that it's going to look different than 2020. COVID's going to be different in 2021. Last year, we were trying to hustle and make ventilators and distribute ventilators to as many people as possible in as many hospitals as possible. And we kind of look back at that now. We're in a different environment now. Now we're trying to distribute vaccines to people in hospitals, right? At some point, we'll start to open up all economies. There's certain areas of the country that might be open more so than others now, but at some point, as vaccines are distributed, more of the economy will open. In fact, I heard Andrew Cuomo, the governor of New York, just do a complete 180 and say that they want to open the economy of New York now. So we are going to see that happen as we move forward. More economies will open, and what that means to us is the things that worked last year might not have the same benefit or boost that they had this coming year, and the things that really struggled through a closed economy might now begin to open and start to do better, much better than predicted, or better than last year, of course. We also know that the Fed is going to remain accommodative. Interest rates are extremely low still today, 1.1% for a 10-year treasury. Okay? The Fed has announced they are not thinking about raising interest rates. So for us, what that means is if you're an individual looking to buy a home, if you're a business that's trying to grow, add personnel, build a new factory, the Fed is encouraging those investment decisions, which we think in turn helps businesses grow and economies perform better. But that's how, as we go from 20 to 21, we're always looking at where we can rebalance. And Rob, why don't you kind of talk to us about what always works, what we want to review?
I guess one thing to keep in mind from what you just said is, I'm surprised that in a global economic shutdown, we are not in a global economic depression, right? So given that, all the anticipation of what could go wrong equals, we still need to stay focused on building a plan that works for you, for your families, and for your financial goals. And so what we want to do at Capstone is build that plan, connect with your financial advisor, and figure out where you need to be in 5 years, in 10 years, 15 years, and get rid of the noise of the next 6 days and the next 6 months. that we want to stay the course and remove emotion, because as we've talked about, the market doesn't really care. And that's sort of harsh, but true. How many times did we wake up and think, well, just the other day, I woke up and thought for sure the market would be down, and it turns out it was up. And any given day, any given reason I might have that I think it's going to be down, apparently it's the exact opposite, it's going to be up. So what works, what always works, build a process or build a plan, stay a process, build a plan, discipline process, and stay the course. This is what institutions do. They don't go all in. They don't go all cash because something might happen. They don't go all stocks because something good might happen, all bonds, all anything. It's a balanced, asset allocated approach with diversified investments that are correlated and non-correlated and measured. So at Capstone, we try and do the same thing for our clients.
And I'd be remiss without mentioning also, a lot of the times when people call us, they always, not always, but most of the time, the issues are domestic, right? And so COVID has been a global problem, but most of the questions that we field on a consistent basis or people's fears are domestic. And so one focus of 2021 also is going to be looking outside of our borders as we have a new administration, as we might have potential tax discussions. A way to combat that is to continue to look globally.
And so when we rebalance, because growth outran value, when we have a disciplined process that allows us to rebalance, selling growth, the winner, and it's emotionally difficult to then buy value, the loser, all of a sudden we see the rotation we talked about earlier, that value outperforms growth, international outperforms domestic, and you're able to have sold high, bought low, and then ride that up, because eventually they will be the loser of the return from last year will become the winner at some point in the future.
As we look also to 2021, we know everybody is currently in tax gathering time, right? So as you have, if you have questions, one thing that we're able to now offer clients and have discussions about, let us help you with that if you'd like us to, right? There's going to be a lot of discussions on what might be coming in tax law changes or what might happen. A lot of that we don't try and get in front of. We don't know. We'll wait and see. But what we do know is PPP2 has been approved. And so if that's something that may be of interest or something that you might be able to qualify for, let us help you with that. And feel free to give us a call, and we stand at the ready to assist you in there. We're going to close our Capstone Coffee conversation today with something that we always do here in our Salem office when we do staff meetings, is we start with a personal and a business positive, right? And so I thought we'd close our 2021 conversation with a personal positive and a business positive. You want to go first, Rob?
Go ahead.
Okay. My personal positive is 2020 was obviously a difficult year. And I can look back and smile, and the fact that we tried to grow at a measured pace. And so when we did have difficulties through the year, Capstone didn't have to make personnel decisions, and we were able to continue to grow at a measured pace throughout the year. And the employees here stepped together, and there's a lot of 2020 was a lot of had some issues outside of COVID. A lot of things were happening throughout the cities, and we had a lot of diverse backgrounds at Capstone that we could be proud of, and so that we came together through this year rather than fragmenting. And so that's something I look back as a personal positive. On the business positive side, I'm happy that the Silverdale office joined us, and we're able to offer now some tax help for clients. That's something that we always like to work closely with clients on before, but had a difficulty kind of integrating that. And now with the assistance of the individuals in the Silverdale office, Stephanie and Dustin and Trenton and Robert and Craig, we're able to assist clients in a more direct way with their tax planning.
Personal positive for me, I think I have two basically. COVID and 2020 difficulties reminded me of how thankful I am for my family, the people I work with, and my friends. And my wife would tell you otherwise, but she might have a different idea of it, but I'm very thankful for the time we got to have together. And from the other aspect of personal, it's kind of in business, but Capstone personnel late in the year, right before Christmas. A group of us were able to get together and partner with Cozy's New York Deli down the street and make meals for about 100 people and support a couple of local homeless shelters. And that was a great day of giving back and helping people in need. Business positive, in line with what Ryan's saying, the ability to grow our practice here at Capstone and grow the platform, as well as just keeping with our overall focus, and the overall reason that we built this was to create a platform and a company that advisors and clients could thrive. And we stuck to that, and we were able to produce.
Right. Before we close, if there are questions, feel free to chat. You can type a question via chat to Kennedy, who's manning the computer behind us. So feel free to chat a question and we'll answer any of those. And I'll give it a little bit of time. It's something that I'll just kind of give maybe a question that's not being asked, but I'll answer one just because, and we'll wait to see if any come. A lot of times when we are rebalancing portfolios, things that have done really well, we get the question, why are we selling that? It's done so well, right? And why would we take some of that off the table? And I think, Rob was alluding to it a little bit about the rotation of some of the things that do the best the next year, become the laggards. It doesn't mean that we don't like a company. It doesn't mean that we don't like an area because we're selling it. But as Rob was just mentioning, it's now maybe not the opportunity set that it was a year ago when things do really well. So we take pride in selling winners at prices that we like. We want to sell at prices when everybody else wants it. And we want to buy when nobody else wants it. And we don't want to be on the flip side of that and selling when nobody else wants it, because then we're getting a low price, right? So just remember that as we bring rebalance ideas and portfolio tweaks, we're trying to sell stuff that everybody else wants, and think of it like that, because that's typically the highest price that we can get for something.
Kennedy, any questions?
Yes, so it looks like we do have a few. One of the questions is it likely that tax law changes this year would be effective next January or effective this year?
Good question. It's a good question.
It's a good question. And so here's an economist answer. We've seen it happen both ways before. We've seen Congress pass tax laws that are retroactive. We've also seen them pass laws that are going to begin come January of next year. So it's anybody's guess. And we try not to guess ahead. As Ryan had mentioned, a quote from Peter Lynch, more money has been lost trying to prepare for a recession than the recession itself. And I think when we kind of apply that to other areas, when you have so much certainty about what's going to happen and the tax law changes or this or that, what if you're wrong? So we like to maintain a balanced approach, try not to look into the crystal ball we don't have, and stay our discipline course and stay the process.
Okay, another question is, given a likely increase in government spending and potentially increase in inflation, what are your thoughts around investing in precious metals such as gold, silver, etc.?
Yeah, that's a good question as well. Gold historically is pointed to as an inflation hedge, right? So you'll see a lot of commentary on doing exactly that. And as inflation goes up and what have you, the value of gold might increase. We can incorporate that into people's portfolios. Gold doesn't make money. It's bought and sold on the perception of value, right? And so we've seen very long periods of decline where gold prices were well under a price from 20 years ago even. So I would point at other ways to also combat inflation that I think are right now a little bit more of an opportunity or value than I would look at precious metals, but you will read a lot about that if inflation becomes a problem. We don't see inflation becoming a quote unquote problem in the short term though.
Okay, and then the last question is, did security get beefed up given the increased successful hacking issues in the US?
Security at Capstone Technology?
Yeah, so yes and no, in that Our system is encrypted. We have certain protocols in line for all transmission of client data as well as data within the company between the branches. Excuse me. And we use certain things to send a link that creates an encrypted VPN secure link for clients to upload data directly to us in a specific folder that is then protected. So we haven't increased or beefed up the security this year because we were already there. And we have to be there for your protection and for our own.
Something to remember also is your money is not housed at Capstone Wealth Advisors, right? We do not hold the assets here. We use a custodian that houses and controls and keeps that encryption. So,
one thing to add to that, as long as we're on the question, security starts at your own keyboard, if you will. Please don't send account numbers. Please don't send attachments with your account numbers. Don't send emails that have attachments with your account number, your name, and your address, and maybe a social security number. We try very hard not to do that. Don't send those to us. It's surprising how many times we get an email that has something that we might not want to do. So if you're concerned about your own identity protection, then start by protecting your own identity. And it's appreciated on our end, and upfront apologies for inconvenience on your end when we ask you to do something a little difficult or different, but it really is for your own protection. So thank you.
all right, we're going to close. Next month, Capstone Coffee Conversation. Brian Felshaw will be joining myself, and we'll be discussing the benefits of working with an independent registered investment advisor such as Capstone. So looking forward to seeing you again next month. Thank you for joining us.